Welcome to the city of movement, memory, and magic.
You keep losing to the market. You keep taking bad trades. As a newbie, you don't even understand what the market looks like. You don't even know what the market is doing. 80% of these times, it is because you are marking your structure wrongly. In this class, I'll be teaching you how to properly mark your structure in the market and increasing your win rate by over 50%. If this interests you, click on the subscribe button, turn on the post notification bell, because that is your tuition fee to be in my class. Have you done that? Now let's get straight into the video. What do we understand by market structure? Market structure simply means the current flow of the market. Because for every river, there is a flow. It is either it is flowing upward or it is flowing downward. The same thing applies to the market. It is either the market is moving up or it is moving down. How do you now identify this pattern in the market? We have different types of market structure, but we are going to be focusing on the major two types, which is the uptrend and the downtrend. Focusing on this uptrend and downtrend, it is broadly classified into two types of structure, which is the minor structure and the major structure. In this class, we are going to be focusing more on the minor structure. How do we get the minor structure? We are going to get the minor structure using the candlesticks. We are going to be broadly classifying it into 4 different types. The first one is going to be when the candle closes above the previous candle high, but does not exceed the previous candle low. The second type is when a candle exceeds the previous candle low, but does not exceed the previous candle high. The third type is when a candle exceeds the previous candle high and low. And the fourth one is when a candle does not exceed the previous candle high and low. Let's start from the first one, which is when a candle exceeds the previous candle high, but does not exceed the previous candle low. What do I mean by that? We have a candlestick, and we have the next candlestick. This is the previous candle high, and this is the previous candle low. Let me change the color of these candles so we can understand it properly. Now, this is the previous candle high, and this is the previous candle low. You will notice something, that the next candle exceeds the previous candle high, but does not exceed the previous candle low. We can refer this as a what? As an uptrend. In a situation, the second type is when a candle exceeds the previous candle low, but does not exceed the previous candle high. In a situation like this, this is the previous candle low, this is the previous candle high. You can see that the previous candle low was broken, but the previous candle high remained protected. We can simply see this as a downtrend in the market, right? Let's get to understand this properly by going to the chart to see some of the examples. In a situation like this, we have a candle, we have the next candle, and we have the next candle again. You can see the pattern that was formed. This is the previous candle high. The previous candle high gets broken, but the previous candle low remains protected. Now, this is the next candle low, and this is the next candle high. You will notice that the previous candle high was broken, but the previous candle low remains protected. It has repeated itself over again here and over again here. So we can draw this as a single move in the market, which is the what? Which is the uptrend move. You can see the impulse move right there. Let's take another example in the market. Let's take this point here. We can see the previous candle low. We can see the previous candle high. The previous candle low remains protected, but the high gets broken. The same thing applies here. You can see the previous candle high gets broken, while the low remains protected until the rule was violated. What do we understand by this uptrend? Uptrend is when the market keeps giving series of highs, series of higher highs and low and higher lows. In the market, this is what we have. In the market, we have something like this. I think I mistakenly changed the color. Okay, it is back. Okay, in a situation where we have something like this, for an uptrend, we have a single move. You know, when the candle keeps printing series of highs, we have to print it as a single move in the market. Then when it violates the rule, we have a retracement, because we have two major types of move in the market. We have the impulse move and the retracement move. This is the impulse move, and this move here is the retracement in the market. And then we have another impulse in the market. This impulse in the market was gotten by the market printing series of highs, breaking the previous candle highs, and we get the retracement when the rule becomes violated. For example, we have a situation here where the rule got violated, the high refused to be broken, and you can see what we have there. The same thing applies to this place, to this point over here. We have a move at this point where the candles kept breaking the highs. As we said earlier, the uptrend is characterized by the market printing series of highs. Now you can see the series of highs right there. The lows remain protected until an high was not broken. Once the high was not broken, you can refer that as a retracement in the market. This is the impulse move. And when the rule gets violated, you have your what? Your retracement. And the next thing, you can see it starts printing series of highs again, and you have your impulse move. You can see exactly what we have there. This is your high, and this is your low. This is your higher high. You can refer it as your HH. And this is your higher low in the market. You can basically see that higher high, higher low. Then you have another higher high. And immediately you see another higher high, and you see the rule get violated again by the market not breaking the previous candle high. You have your retracement again to get your higher low. And when the candle starts printing series of highs again, you have your what? Higher high in the market. That is basically for an uptrend. And we have been able to identify that in the market. Then what do we understand by a downtrend? A downtrend is a situation in the market where the candles keeps printing series of lows. We have lower lows, we have lower high, and we have lower lows. For example, we have a candle, and I said earlier that a downtrend is characterized when the previous candle high remains protected, but the previous candle low remains vulnerable. It keeps breaking the previous candle lows, but the highs remain the way it is. For example, this is a candle, and we have the next candle just after it. You can see the high remains protected, while the low remains vulnerable in the market. And the next thing you should be expecting is for the next candle to break the previous candle low, but the previous candle high remains what? It remains protected. Let's get straight into the market to identify this situation. For example, we have this. You can see the candle next. You can see this candle. The candle right after it broke the previous candle low, but the candle high remains what? Protected. The next candle, this is the candle that I just printed. You can see what it just did. The next candle low, the previous candle low gets broken, but the previous candle high remains protected. The same thing applies here, and it goes on and on and on. So now we know when we have an uptrend and we know when we have a downtrend. We know when the candles keeps printing series of lows, and we know when the candle keeps printing series of highs. And I said that in this kind of situation, we have the impulse move and we have the retracement move. An impulse move is when the move to the upside is greater than the move to the downside, while a retracement is just a pause. The impulse move is the original move. But when something is happening in the market does not just move in an haphazard motion. It does not keep moving continuously. When it gets to a level, it does a pause, refuel its energy, then it continues its move again. Exactly what happens in the market. You can see the candle printing series of highs right here. Series of highs. This next candle, let me zoom it properly. You can see this candle here. This candle breaks the previous candle high. This candle here breaks the previous candle high. And what do you see next? The next candle does not exceed the previous candle high. What does that tell you in the market? It simply tells you that there is a pause in the market. There is now a retracement. So all these ones that were breaking each other highs, you can mark them as a single candle. And where did the retracement stop? You can see that this is the last low of the retracement. This is the retracement, and then you wait for this high to get broken again until you can see it keeps printing series of highs till it got to this point here. You can basically see that it got to this point here, and then it does another retracement, a pause in the market. You can see the pause. This is the pause in the market. This is where the pause got to. Then it continued its move again to this end. You can see this is simply what we understand by an uptrend in the market. You can see the candles. You can see the market printing series of higher highs and higher lows. You can definitely see how the low remains protected, but the high remains vulnerable. You have your break of structure. This is your new higher low. You have your higher low again here. You have your higher low again here, and you have your higher high, which gets broken, and it keeps going and going till the market stops that particular movement. Now, let's get the example of a downtrend in this market. You can see what we have here. We have this particular move, and you can see the retracement printing series of highs till it got to this level. You wait for this zone to get broken again. You can see after getting broken, you can see the way it keeps printing series of lows, and then there is a retracement again in the market, and you have another impulse move to the downside. You can see that in the market. Now, the next type of candlestick pattern that we are going to identify the kind of structure in the market is the outside bar. In a situation where the previous candle high and low gets violated, how do you mark such structure? It was exceeded. How do you mark such structure? Now we have a candlestick pattern here. We have a candle. We have another candle. We have another candle. You can see the lows getting broken. We understand that if we are to get our retracement, we are supposed to just get the high of this particular zone getting broken, and then our low, we keep printing new lows in the market. But in a situation where this particular candle exceed both candles, how do you mark such structure? This is how you do it. You connect these three candles that broke each other loose, you connect them together, then you take the eye of the outside bar. You take the eye first. You don't take this zone first. Many people make the mistake of taking this zone first. You don't take this zone first. You take the eye of that candle first before the low. That is how you mark an outside bar. Let's get straight into the market to understand how this outside bar works. Let's go to GBP USD to understand, because there was a particular one on GBP USD that repeated itself twice. So I want to show you guys how it worked. So we have a situation at this zone here. Look at this zone here. You can see what the market did. The market kept breaking the highs. After getting to this level, there was a pause. After the pause, you can see what we have here. We have this zone, we have this move, we have this downward move. Then it keeps breaking the highs again till it got to this level. Then we saw this outside bar, a candle exceeding the previous candle high and lows. What do? You don't mark, you don't take, because it is, you know what you do normally is to connect the highs, but this is an outside bar, so you don't take the first high of the outside bar, you take the low of the outside bar. So we get to this level, then we take the low first before taking the high again in the market. That is how you mark an outside bar, and it repeated itself over here again. Look at this, is another outside bar. This candle exceeded the high and low of this particular candle. So what do you do first? You take the low of this candle first before you eventually take the high of the candle. You can see that is simply how you mark an outside bar in the market. You can see that. So we have been able to identify that in the market. So let's take another example. We have another example here of this particular candle. You can see this candle exceeding the high and low of this previous candle. So how do we mark it? We take the candles that exceeded each other's low. We take it, then we take the high of the outside bar, then we continue our movements. That is simply how you mark an outside bar. The last type of candlestick pattern we are going to be understanding the structure in the market is the inside bar. In a situation where the high and low of the previous candle was not broken, how do you mark such market structure? You have a candle, you have another candle, you have another candle. You can see the high is getting broken, and all of a sudden you have the next candle just closing inside. It does not exceed the high, neither does it exceed this low. It does not exceed the high, neither does it exceed this low. How do you mark such structure? This is how you mark it. You connect these candles together. Then the first thing you do is to take the low of this inside bar. This candle is called an inside bar in the market. So you take the low of this candle and continue your move. That is how you mark such in the market. Now let's go into the market and see such candle example. We have seen it over here. You can see the candles exceeding each other's high. But when it got to this level here, let me zoom it out for you guys. But when it got to this level here, you can see this next candle just staying inside this single candle over here. It simply tells you that the market did a pause. How do you mark that? I said it earlier. You take the low of the candle and continue your movement. You mark it to this zone here, and then you take the low of the inside bar and continue your move in the market. That is simply how you mark an inside bar. Let me take another example. This is another one over here. You can see the candles over here printing highs. You can see them taking out each other's high. But when it got to this level, this particular candle here, sorry, I didn't see it very well. It exceeded it. Let's take another one. Let's check for another one in this market. Let's try to get another one. There are a lot of inside bar in the market. It always shows up over and over again. Exactly. You can see over here, you can see this candle breaking above this previous candle. So we can mark the both candles as a single move. But when it got here, this candle refused to exceed the previous candle high, and it refused to exceed the previous candle low. So how do you mark it? Since you have your single move over here, so you can take the low of the inside bar and you continue your move. Basically, that is how you mark an inside bar. If you have watched this video to this level, you should consider subscribing to this YouTube channel right now, so you can be notified whenever I drop a new video. Remember, This is just the minor structure in the market. In my next video, I will be teaching how to mark major structure in the market. Remember, there is no way you can mark a major structure without you understanding how to identify a minor structure in the market. So if you've learned something in this video, consider subscribing right now, like this video, share it to someone that it might interest, comment your favorite part or what you've learned for this video and what you would like me to teach again in my next video. We meet again in the next class. Thank you.